the 1st of March. Welcome to the 1st of March. We're looking at the Euro on our 6-screen strategy template. Let's have a look at the daily time frame. I think this pair has been banging its head. Yep. Yesterday it picked its high up and tested a previous high, wick high, just above 1385.50. And during the course of the latter part of the US session, pulled back significantly to just close higher than the open of the previous day. And then the Asian market has been trading in, well, slightly higher, a couple of pips higher this morning, which is good because momentum is still there. Okay, you can see we're still coming from an all-time low. And if I do a quick projection, then go to that high and pull that down again. We're playing around the 38.2%. 50 is not too far off, 61 there and 100 up there. So we're only too far away from the projection figures. There's another one over here, probably even better. Never been taken to that one over there. For this move. The ultimate move would have been that one. So 100% is played with as we speak. It needs to break obviously above a 138.50 to even see further extensions. Otherwise, we're going to have another two. This is the fourth day we're going into of sideways motion. Not much happening in Europe. Unlike its cousin across the lake, the sterling hit a beautiful day yesterday. So, what should we be looking for today? Well, consolidation is probably one thing. Let's have a look. Primarily because, as you can see on an hourly chart, after the high, we've had a lower swing just after the Asian market open at 2 a.m. this morning. And what that's done is it's obviously given us a swing low. This hourly candle now is bullish. It is now testing, and it's going to be testing the higher here, just around the, no mistake here, yeah, the 138.250 mark. But be aware this candle has to close first in order to actually be considered bullish, because then if you look at it, overall we're in an uptrend and all our swings are higher are this pullback. Okay, so getting swing, this swing, that's higher than that, that's higher than that, that's higher than that. So the momentum drive is still higher. We are now coming into contact with the previous high, so we're going to get a bit of consolidation happening. Okay, so as it stands, well, that hourly candle has to close first in order to, otherwise what we could do is see it push higher and then just revert downside, and all you have is an exhaustion wick, i.e. one of these solid babies here on the far left, which you can see, sucking people in the morning, and then revert into the downside. Okay, just remember we are trading near a high, so if we do get extensions, it's got to be some good movement, i.e. it's got to break obviously the Asian high to start with, around this level here, will be perfect, and even then we smack bang into this one here. So momentum drive we'll need today. We need a lot of oomph, and we've got to see that. Like the UK yesterday morning, a lot of people got fake turn, pulled back quite significantly, and then went on the second leg and just blew the top straight off it, and we saw cable rise. Okay, so we saw the momentum drive in our favor. We have a downside. So this is only normal because we've actually tested a previous high altogether. You'll notice this shoulder and this shoulder over here are low in that one. So we don't want to be thinking now that momentum drive is going to switch now, primarily because we are testing a very strong high level. If Euro trades above this area here, then we are trading higher than significant high that we haven't seen since early Feb. So a month's high. Strange, huh? If we break above that, then we'll be running right up here to 14,200, which is quite cool. There's a lot of momentum here. So we can see the breakup this morning. All you guys that are trading the small time frames, the 15 minutes, for example, there's a breakout pattern, closed higher. Where would your first target be? Too close to call. Not much in there. Second one, if it stays higher than that, then yeah, definite, because then you got your 5, 10, 15, 20, 25. Give you 5 pips back to the market, so there's 20 pips in that, so it needs to close higher than that, and then you're A for away. Okay, that's on the Euro. We'll be back next with the sterling against US dollar. Next up, UK sterling against the US dollar. Let's have a look at the daily time frame. Beautiful extensions. Yet again, another day where we've seen the 20-period moving average acting as a support level, pushing us higher. Long widths to the downside, catching a lot of people out, and then remaining strong during the following, well, the US session, and pushing higher, pushing higher, pushing higher, pushing higher. A lot of swinging, highs, 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 highs. These swings, all high, showing you momentum. Higher, higher, higher. Slightly pullback. This back to a 1600 mark. Bang. Continuation. As we've moved forward now, you'll notice that we've now starting to squeeze now. Momentum is starting to drift sideways, primarily because we're now testing all-time high that we haven't seen back since early November. Okay, and we've seen the testing in the Asian market session this morning. So beautiful movement right up to the previous high of this candle here. Oops, I can draw a nice straight line. Fantastic. But you know, I mean, this candle here, just above the 1625, like I said it would yesterday morning. I mentioned that it had to close higher than the one peak there at 1617-ish, 15 or 16, and you'd be on your way. And I think a lot of people took it. So good to you guys who actually stepped in and took that momentum, because that's what you want in the market. And you were able to capitalize not just on 20 pips, but a hell of a lot more, which is big. Well done, guys. But now, Asian market's taking it higher, which is fantastic, because the market's still seeing a lot more drive to the upside, but we're now hitting a very strong resistance level that we haven't seen since early November. So be aware of that. See how the market just faded out on our hourly chart during the other part of the evening. Tends to do that on majors. A lot of people took a lot of influence higher. If you look at the projection, for example, this was the low of yesterday, with that pullback at 1615. Had to close higher than that on an early time frame, which it did. If I just, oops, apologies guys. Not enough caffeine this morning. Yeah, let's try that again. So, bang. That's the target there. This move here. Now I need to pull that back. To the pullback. You'll notice that we broke above the 100. Consolidated and continued. And now we are hitting the 161.8 bib extension in 1629. Okay, we need to obviously break higher in that first significantly, and then we'll see further extensions to the upside. Okay, so what we're looking for now? Well, on our small time frames, we've seen consolidation. Great. So we look at the Asian market low and the high. Whether it's a high from yesterday or the Asian market high. You see the momentum swings are still high, high, high. Just until this plateau here, we're seeing a bit of movement. So draw a nice box around it. This will help you guys. Trust me. It's helping me a hell of a lot. You don't want to be trading that noise. Okay. That range there is a no-go range. You might think there's 20 pips in here. Cool. But what are you going to get in? Well, swing lows, breakout, entry down. Entry is going to be the high of this candle here, and oops, not enough. So pointless. Got to have momentum. Must have momentum in order for price movement to occur. Where's our trend direction? Has anybody put their trends in? Look at that, guys. See that? 15-minute chart, trend in. Now it's interesting because my trend is going to be coming into play very, very soon. Okay, so this is very, very bullish, or has been for a number of days. Then, hopefully, the 15-minute chart, we see this trend, this intermediate trend. Oh, sorry, the major trend for this time frame come to play and push this higher. That's what we want. So rather, go to your broker now and put a signal saying, listen, I'm not going to trade this above 1630 unless it's broken above 1630 and close higher, or okay, I'm not going to be trading this until it's actually broken lower than 1626. But just be aware, there's a lot of momentum trades. Major resistance and support here, okay? And you're at the 50 period. So rather make it, and you can see there's a massive resistance. So it's got to trade lower than 1624.50 at least. Okay. Give it to the market, not a problem, because it's wishy-washy, not really interested. You might be able to actually capitalize if the pair goes, but there's not much in it movement-wise, guys. You don't want to be faked into trades. It's far easier to be faked into trades these days and not making them at all. Okay. Go with the trend. Wait for the market to move. Then you trade the movement. That's what we want. We want the institutions to do the hard work for us, and we capitalize on that movement. That's exactly what we want. Okay, so for this pair here, you can see noticeable resistance. Also bought around about the 16.2450, 16.2500 mark, and then we've got the high of 16.30, that we need to get breaking up. Okay, so in order for that to see progression, we need to see it trading above 16.30, or if we're going to see downside movement, we need to see it trading below the 16.2400 mark. Done. Next pair is going to be the US dollar against the Swiss franc. I'll see you soon. Okay, next up is the US dollar Swiss franc on a 6-screen strategy template, or CTC strategy template. Apologies for that, guys. The daily trend. Wow, look at that. Okay, you can see the pair's broken a major support level last week. And what we're seeing now is the pair pulling back to the underside. Failure, what you're seeing is going to be not testing the underside of this previous support level. Failure to break higher would obviously this just as a consolidation. Or in trading terms, a breakout, pullback, and we should be looking for the continuation of that to the downside in the momentum of in the direction of where prices come from. Okay, in this case you can see very strong slide, so we should be looking for nothing more than down movement. Okay. It would have been pointless trading this yesterday. As I mentioned, there's nothing in it. Same Japanese, not much happening on it. So consolidating, and you don't want to be trading consolidation, you want to be trading momentum. Okay, so we wait for the momentum. Let's have a look into that. See that consolidation on a 4-hour, hourly. Let's go up to hourly and see what's happening here. Are the highs? What has the pair done in the Asian session? It's tested a previous resistance and support level, hasn't it? 932. Yeah? Not so? Okay. Well, if that's the case, then it needs to be trading above that, because there was a resistance 2 days ago. It needs to be trading higher than 93200 for further progression to the upside. If not, this is just a consolidation on a pair that has just broken a major trend, i.e. daily, and what we're seeing now is just consolidation before we see a further extension or a further drive. Okay? Look at that. Take out that huge. That's the trend. That's the trend direction. Down. CTCs, all reds. Bottom, red. Speckles are blue. Red. The drive is down. Huge fake outs along the way, but you can see the market is down. 200 period moving average is coming into play now. Okay, so got to break above 93200. That's on an hourly chart. So where are we trading now? Way below that. So we need that up, that momentum now to start happening. Otherwise, just sit back, rather wait, trade another pair. Okay. So there's that level again. 932 coming into play. Bang. Trade to resistance. It is, however, swinging high, which is a good sign. But that'll be an abrupt end to that if it cannot break. The most important part now is the 932, because that's holding it back. It's held it back previously. Okay. Breaks out of that. There's a bit of fresh air between here and the all-important underside of the belly, which is this level here at 93. 93, what's that? Apologies, guys. Let me get to my daily. Yeah, which isn't too far away from us now. So be aware of that. This candle here will probably be 93340. So it's not too far away. 93340. Okay? 93340. So it's there. So once it's broken through, you're gonna hit smack bang into further resistance. So this thing's going now, then you want to take that all out of the equation. So what do you want to do? Between here and there is only 15 pips, and by the time you get in, you've got to subtract your stop, etc., and it's not worth it. So rather say, great, momentum drive, it's got a hell of a lot to do to the upside, momentum's to the downside, Let me see if there's further downside movement. So the break of, it's pulling back now. It's trading higher than yesterday's high. There we go. Then we need to see it stay above that, because momentum will be with us then, because we see the swings are higher. This one's higher than that, this one's higher than that, this one's higher than that. This one has to be higher than that for it to be momentum drive. The 200 period might come to play again down here, and then you could see upside drop, but it's got a lot of work to do in order to get back up. And that could just be dragging people into the market as a fake out, putting them and sucking them all in for longs, bring them all back again, and then you could see a nice big juicy spike through previous support, i.e. on a daily, like one of these suckers, indecision, through, like that, putting everybody in, thinking, okay, we're going on, and then we're back into the downside. Remember, we still have huge issues in the Middle East. People are going to look at Swiss dollar, the Swissy, as a safe haven. What it has. You know, people might run to platinum, gold, silver, but the Swiss franc always comes and saves the day. Just remember that. Okay. So, I'll leave it to you. You guys can do the remainder now. I'm going to finish off today by looking at the US dollar Japanese yen. Take care. Okay, in front of me we have the last pair of the day. For the 1st of March, it's the US dollar against Japanese yen. Let's have a look at the daily time frame. Here again, like it's compatriot, US dollar against Swiss franc, we've seen a pause. Now, I mentioned yesterday, a lot of people saying, one of our streams was saying, do you see any progression on the US Japanese yen or the yen? And I said no, primarily because we're going to be testing a support level. You'll notice that on a big time frame, which I do recommend all you guys looking at, you'll notice that the pair has been posting, the lows are higher than the previous. So we have this squeeze occurring on a bigger time frame. Okay, noticeable, and for that to continue to the downside was quite. It wasn't really going to happen primarily because of this. Okay, so we're literally trading in some sort of channel, squeezing channel, and we saw yesterday we traded slightly higher than the previous day, but the momentum drive was still to the downside. The US dollar is still finding it hard against the Japanese yen, and today on the Asian market, we've seen it raise slightly. Now, what we could see, and we've seen in the past, is a bounce along this area. Okay, so as it stands now, what we should be looking for in today is a possible trade to the upside, even though we're negative for this. Why? Well, look at it. I mean, for the last couple of days, we've been trading sideways for one on a strong support level, 81.60. Bang, bang. Can't break 81.60. Had to break 81.60. I mentioned a lot of times last week. Needs to break 81.60. The trend. I'm looking at the 30-minute chart, guys. The trend was down. Broke that trend. Consolidating. Needed to break higher than this to confirm that the drive is now changing. Market sentiment is now changing. There seems to be a slight change in market sentiment. People are starting to think, well, do we see something more favorable to the upside here? And sure enough, during the Asian market session, we saw a test of that area here at 82.05 and a break of it. Now we're seeing a pullback. What are you seeing here? This swing was higher than that. We're not getting flat swings anymore. So we're seeing momentum slightly shift now from one side to another. So projection-wise, bang, that's the high, bring it down to the low. 100% is this breakout area here at 82.05. Almost made the 161.8 fib. Now we're pulling back. As long as it stays above the 82.05 or 8200 mark, it's done enough. It's broken the previous support resistance level. It needs to stay above that now to confirm people, i.e. ourselves and other people that are out there that are trading all the institutions, that the momentum is now in our favor. This is a swing. It's higher than this one. So let's draw a trend line. Cool. It stays above that area, even better. Not so? Why not? Pull back in this area. Oops, I've lost my. Not doing really well this morning, chaps. Apologies for this. Caffeine is still on. I haven't changed my brand. Anyway, you'll see that. There's scope here on projections. A lot of scope. Okay, so seeing high highs, 50 period moving, being tested as you speak now on a very small time frame, i.e. the 5 minutes, needs to stay above that. Okay, or 82.05. So you can pencil that into, or it can go down as low as 8200 because then it'll be trading higher than that breakout high. So the squeeze higher. So very important. Okay. Just remember that we're on a downtrend, so don't be suckered. We have seen bounces in the past on a daily time frame, so we're looking for one. We still got to take into consideration maybe on a negative trend. Okay, don't go into sucker punch. So you can see the momentum's to the downside. That's 82.20 now is going to come into play. This trend line ish. So be aware of that. Okay, it needs to stay well above 82.20. Confirm further break of the trend line to the downside so we can see potential upside movement. Hey guys, that's it in short. Hope you have a fantastic 1st of March. And then I'll see you tomorrow morning, bright and early. Take care, all the best. And don't get trades or anything.